Going guys, and today we got plug power because the chart is just it's nosediving, it's plunging down, collapsing, and the freak out has started. And lots of talks of maybe the lost decade for 2020 to 2030, maybe a possibility. It has happened before, so we'll see what everything going on there. But plug individually, what's going to go on? What's the chart looking like? And is there any good news for anything now? We can see plug on its chart maybe having a inverse shoulder, a head and shoulders here. So didn't play out that way because otherwise it would have moved up, but it moved all the way back down. And we have plunged through the red channel yet again. It's been crazy recently with this because you can see we have pretty quick rallies through it, going up to it and then crashing down through it, pretty quick up. Spent some time kind of around here, but it wasn't in the channel. So it was above it, fell in, got above, fell in, got above, and then fell all the way down. It's been very quick to move up and down through this. We haven't really stayed here like we did back right here where this channel was created, where I drew these lines, because we had the three interactions at the bottom here, a lot of interactions around the top, and then ultimately end up in a massive rally upwards. We stayed in the channel for a long time, kind of using this as support. This was resistance, and eventually triple bottom, bounced up. But recently, it just hasn't been that way. It's been quick moves up and down through it. So we'll see what else goes on. The overall market, not good, terrible spot. I mean, you can see all of this stuff. Might as well see how the big guys moving. Google down 1.4, Tesla down 4.5, Apple down 1.5. So the big guys falling, the entire market falling, globally falling. Nothing is going good right now. A lot of lost decade discussion, a lot of global depression discussion. So basically nothing good happening. And obviously, in these circumstances, the riskiest stocks and the riskiest assets, they get sold first and they go away and fall harder than something like the big guys like Apple, Microsoft, these trillion-dollar companies and blue chip stocks. They fall first. But for plug, we did have kind of a trend line, maybe something like around here where you can see we kind of bounced off this a bit. But ultimately, it doesn't matter because we fell all the way back down. We're back into this channel, so maybe more interactions coming in here. Heavy sell-off. If we can try and get back up and into the red channel just as a recovery bounce for the overall market, then maybe we can get back in here and try and kind of use these as it has been used in the past here as a support. But for right now, nothing really individually of plug matters. It all matters in the overall market, the Federal Reserve and the interest rates, how investors are viewing all of that stuff. And then on top of that, all the negative macroeconomic stuff that affects the riskier stuff first and worse than it does obviously anything else, the bigger guys. So plug is in that category of just more risky. But for plug here too, Motley Fool article, which is, take it as you please, but saying many stocks in the sector moved higher in anticipation of the passage of the federal climate legislation. Ultimately became the Inflation Reduction Act in the last 3 months. Shares of Plug Power and Bloom Energy are up 35% and 27%. And then First Solar, which is a solar company, up more than 90%. So the Inflation Reduction Act obviously had a lot of climate change stuff in there and climate provisions and money for green energy and renewable energy stuff, which was good for things like plug power, the hydrogen sector, solar power, anything renewable, obviously good for you can get money to you for that. And plug is building out to become profitable, so getting free money from the government and subsidies, easy way for plug to kind of continue moving forward and building out their company at less of a loss, and that's more attractive. And this talks about the macroeconomic environment, particularly with the Federal Reserve hiking interest rates by 75 basis points for the third straight time, likely explains why Plug Power and Bloom Energy have dropped. Obviously, the entire eyes on all markets, everything from the stock market to crypto to even real estate, all eyes are on the Fed and the federal funds rate, the interest rates they're doing, how much they're hiking, how much more they're going to hike. Nobody knows. That is the only story that matters to any investors, is what is the Fed doing, and don't fight the Fed. So we'll see when that turns. At some point, it should have to turn, but that point won't happen until inflation's under control and the Fed starts not raising rates or keeping rates flat or starts talking better about their plans on inflation, but it all wraps around to inflation, and they have to make sure that that's under control before shifting anywhere else. And this talks about kind of the solar company compared to Plug and Bloom, saying investors feel better owning a growing business with positive earnings right now versus more speculative companies like Plug and Bloom. These companies are also growing quickly, but the hydrogen industry isn't nearly as far along as solar. Obviously, solar been around a lot longer, talked about a lot longer, built out a lot more than hydrogen. As interest rates are being increased globally to tame inflation, investors are shying away from more speculative areas like hydrogen. So that is obviously right. Investors are going to go less risky and risk off during this time. So it makes sense that things that are more risky are going to sell off, right? But looking at positive earnings, so the solar company that you're talking here, Solar Power, is profitable from what I've read. I haven't done a deep dive in it, but I think that they're making money. But some of the things that I want to focus on is, again, Plug's 2024 profitability date. They should be profitable by then. That's their own goals and what they set out. And that's kind of backed up by their earnings a little bit. They're not profitable yet, but you do see the climbing staircase here. If we look at, you can see the most recent quarter, Q2 2022. We go to Q2 2021, revenue 124 million. Revenue for this one 151 million. So it's growing, it's going up, which is a good thing. Hopefully they keep growing the revenue. The problem with their earnings right now is the loss of money that they're doing. So you see even this with the revenue moving up and kind of staircasing up, a little bit of plateau here, but ultimately still higher than it was a year ago. The loss has been going down and down. So as earnings go up, the losses go down or up even more. They lose more money, which is a big problem. And when we can see that turn, will be a massive good step for Plug and for the stock and for everything when they have more revenue and less lost money. We'll see it on this chart when they get a revenue that goes up with this chart, losing less money. It's going to be a great combination for them to actually start getting excited, and investors to start getting excited that they're not burning as much money and they're making more money. That's a good combination to have. That's what we need to see next for their earnings. And just looking at their insider trading here, with insiders basically buying all the time, barely ever selling. We have 6 sells and then 9 buys, 18 buys, 8 buys, and 1 buy in the last year and a half, maybe a little over a year. But that's a good sign that investors are at least buying, because that would be, they have a little bit more insight than me and you kind of looking outside in. And if they're buying and they're excited and they like where the company is heading, that's good for Plug. Should mean it's heading in the right direction. And if they're buying the stock, that should mean that they think the stock is undervalued and going to go up in value within a certain amount of time, because Plug's doing the right things, moving the right directions. And, maybe that combination of higher revenue, lower expenses is going to come in and going to be great for the stock. Insiders being bullish, massive good sign for any company. You never want to see insiders constantly selling. That would mean they don't really believe where the company is going. If they don't believe where it's going and they're still working on the company, are they really doing the best work? So just buying, you want to see them buying and not selling. At bare minimum, you want to see them not selling. And even though hydrogen is a smaller kind of economy, the hydrogen economy is smaller than maybe solar is, maybe even wind. I don't know wind, but solar is definitely much bigger. You can see here, Plug and Bloom continue to move forward. Today, for example, Plug announced it has commissioned a 1 megawatt hydrogen generating electrolyzer at the world's first green energy production offshore platform. Plug continue building out its infrastructure. We'll start to see that go to work. They should be finishing their plans, start getting them working soon. And when we see that going to work, then we'll start to see what maybe Plug really can do in the future with hydrogen and providing hydrogen, making it. But for this, globally, the European Commission, executive arm of the European Union, just approved as much as a 5.2 billion euro, just $5.1 billion in public funding for hydrogen projects. So even globally, the US has the Inflation Reduction Act that has some stuff in there for green energy, hydrogen, solar, and all this kinds of stuff. And even in Europe, they have just hydrogen itself, hydrogen projects approved funding and $5 billion That's going to help companies like Plug, like Bloom, build out their infrastructure, build out their plants, and burn less money while they make more. That could also lead to the combination of making more money while burning less is the public funding and government funding that is starting to get out there. And the worry for everyone is the slower global economic growth and higher interest rates are making investors seek out less risky assets, knocking shares of these alternative energy stocks down today. Obviously, completely what is happening. Higher interest rates, riskier assets, and riskier overall global economy means that the risky stuff gets sold off first and they dump that to be more safe, have more cash, and go through the crisis of everything feeling less volatility. Doesn't mean these companies are bad investments, doesn't mean they're going to zero, just means that right now, investors are more likely to sell than they are to buy. But long term is what you want to look at. 5 years, 10 years. We're not going to be in this crisis forever, but 5 years or 10 years is where we want to look, focus on, and where will they be then? Where does the European Union here with their funding build out a hydrogen economy? Does that build out? Does the $5 billion that they allow, companies to use to build out stuff, does that build the economy into $10 billion economy or something? Does it allow these companies to start running on a profit and actually start generating revenue, and then they start building out even more and it just starts getting bigger and bigger? It's possible that all this funding, which is going to take years to actually see how it goes, but we did see it play out with something like Tesla, where they were getting subsidiaries from the government. They were highly incentivizing EVs, trying to get that rolling, and Tesla ended up absolutely blowing up as a company and exploding in value, even though it was the most shorted stock on the whole market for a long time. They defied it all, blew up. The company became insanely valuable, and people who were invested in it made a lot of money. Could be looking at the same thing happening for Plug right here, maybe not another Tesla, another ridiculous run up where Plug goes to be $1 trillion company. I mean, that would be ridiculous if that happens, but chances are very low that that exactly happens. But building out this economy is the stage that we're in now. It's going to take more time to get it out there. All we got to really focus on is 2024. Plug's got to be profitable. That's the first main goal and big goal they've set out, and they seem very confident they're going to hit it. So that's the short-term eye on making sure that happens. If not, reevaluate everything. But for now, 5-year, 10-year, like 2030 is the plan to see where this hydrogen stuff can go once it's built out, once it's operating, how it can actually work as a hydrogen economy, how Plug's going to develop into it, and Plug, being the market leader, is going to have the best advantage and return over everybody else. But it's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next